What's going on, guys? Happy Friday. I want to give you guys a weekly update on the put options trading I did, and also want to go into how to mitigate risks when doing put options. So, great example this week with Palantir. We'll get into it later. It's going to be a little bit longer of a video. So I'll go through the tradings at the beginning, and then if you guys want to stick around and kind of go through how to mitigate risks with options trading, highly suggest you stick around because this could definitely come in handy in use in the future. So at that, let's jump right into it here. And I'm going to pull up the stock trading that I did this week. So Monday, obviously, we did not have the market open. So everything occurred for the most part on Tuesday. The biggest offender this week was Palantir. So we went in at 1,000 shares with a $16 strike point to expire this week. We had some good premiums this week. And the other one was SoFi. Did some call options on SoFi, Palantir, Neo. So those are all covered calls. So I have shares and basically looking to sell those at a higher price point than I bought them for. Again, all expiring this week. And we're pretty good on those. Those should all, the contracts on those should all expire without an issue. I did also open up some sell put options, covered put options on SoFi as well at the $8 strike point. Again, as of right now, anyway, this is also set to expire. And throughout the week, just with Palantir, I kind of show you the chart here in a little bit, but Palantir, was diving pretty good this week. So I was looking to mitigate some risks, buying some buy put options. But it was pretty volatile. And let's face it, guys, I work at 9 to 5 jobs, so I can't sit here and watch the market 100% all day, and do that. So I did open up some of these options and was kind of tracking it. I was hoping it was actually going to spike a little bit more than it had. It would really just kind of drop and it would kind of bounce between a couple ranges. So I, was just kind of watching it. And at some point, I can't sit here all day and watch this stuff. So I ended up just breaking even on that. Opened up another one, kind of did the same thing at a $15 strike point. And again, it did not really dip as much as, I might have anticipated. So again, sold that one for, $1. But either way, we didn't lose money, which is always the goal, right? Either break even or make money. So we did accomplish that through the course of the week with Palantir. This is what I want to get into later on the video, is how to mitigate risks on here. So I did end up actually rolling this option into next week at the same strike price and still made a profit. So, through the week, we are up $474 in premiums, and not a horrible week, guys. So at that, let's take a look at the Palantir chart, and we can kind of see, what all occurred this week. Actually, kind of a pretty big week for being a short week. We had 2 Fed calls this week, or conference calls, I should say, with Powell basically coming out and reiterating kind of what everybody has known for quite a while now, that they do see possible height rates, maybe towards the end of the year or into the beginning of next year. And the market kind of reacted, in a way where it was causing stocks to dip, which, it was bound to happen. Palantir, you can see it started the week at around $16.30, give or take. And through the course of the week, it's been dropping. Currently, we're trading about $13.91. And if we just look at, the SPY or the overall, S&P 500, it honestly did the same thing, guys. So it, started at this $443. And, it's slowly been going down through the course of the week. Currently trading at $434. I don't think there's any reason at all to be worried. In my opinion, it's a nice, healthy pullback. It was bound to happen. If we just look over the course of the year, the SPY started the year roughly $380, and it went up to $442. So it's like an 18% increase, pretty much continually going up. So at some point, guys, it's pretty common we're going to see a pullback. So I think it's a healthy pullback. And, it's pretty much the same trend we saw with Palantir this week. Obviously it's a little different because it's not an overall market, it's an individual company, but it reacted in quite the same manner. So we had been having a pretty nice, upward trend, and now we had a pullback. So again, I don't think there's anything to be concerned of. I don't think Palantir by any means is a bad company to own right now. And personally, if I were to get assigned at the $16 limit, it wouldn't like totally freak me out, but if I can mitigate risks and push it a week or roll options to get this at a lower price point, I'm all for it, guys, because I'm looking for this long term. So even if I had this at $16, I mean, I think over the long term, it's going to well surpass $16. But in the short term, I mean, I'm definitely going to be smart about my money and make as most money as I can, and or get this at a lower premium as well. So, or I should say at a lower strike price, buy price. So let's just look at how you guys can go about that. I already did Palantir, so let's just go with SoFi. So this is the sell put option I did this week. Again, we're trading at $18.13. So it's possible by the end of the trading day, this might get assigned, but we'll see. But regardless, if we wanted to, roll this position or basically buy out of this option and buy a new option at a future time, is essentially what it's doing. We can look at that. So if we go roll option, it's nice. Robinhood kind of has this feature where it just rolls it, and what you're basically doing. So since I bought a covered put, we would be, I basically, let me restate that. I sold a put. So in order to close that, you'd have to buy the put back at whatever cost it is. And then I would sell another put at a future date at a different premium. Now, the goal is you would want to set it either at a lower strike price, which would be ideal, and or just a later date and a premium in which you're going to basically break even or make money. So example would be, so this week we have to go to the end of the week. So we can see here that here is the sell secured put option that was purchased at the $8 strike price. So you would have to do is it would basically be buying this back. So that's what you see here, basically buying this at the $2 premium. And we would then pick a new date, so future date, right? So right now it would be, we're thinking next week. Now I could put this at $8 again, and I would be getting $26 in premium. So if we were to do this, there's two contracts. That'd be $52 I'd be getting, and minus $2. So you would basically net $50 by doing this rolling option. Now, in my case with Palantir, the premium for me to buy it out would have been close to $2.08 per share. Actually, let's just go to the chart. Makes it way easier. So it would have been $2.03, right? Because it's times 100 for every one contract's 100 shares, right? So I would have had to buy this at $2.03, right? So it would have cost me basically $2,000 to close out of this contract. And then I wouldn't have had to get assigned the shares, and I'd basically get my $14,000 back in collateral minus the $2,000. But instead of doing that, and instead of getting assigned the shares where you'd obviously be at a loss because the stock is trading below the 1,600, or excuse me, the $16. What I ended up doing is just pushing it a week. I ended up getting a better premium for that. So I was able to basically buy another covered sell put option at $2.10. So basically making $7 per contract. I opened 10 contracts, so I ended up making $70. So, I mean, at that point, guys, it's kind of a no-brainer, right? I mean, I could still potentially get assigned the shares, but I'm not in a worse position than what I was. Now, next week, if the stock is still trading low, I could, again, roll it again, see what the premiums are, possibly roll it and lower my strike price, which would give me back collateral, and it would also hopefully give me a premium where I could still make money on the week. So to me, it's really a a win-win, guys. Again, I still think Palantir is a long-term stock to hold. But there's no sense to me just letting this expire, getting it at $16 and sitting here with a negative $2,000 in loss until this thing bounces back up. Why not use that money, keep collecting premium on it, anticipating the stock to slowly continue to rise, which is going to bring up the option premiums as a result. And at some point it might get closer to that $14.50, $15 again, where I could actually probably lower my strike price, still collect a nice premium, and continue making money. So it's a pretty good win-win, guys. Hopefully that made sense. If you got any other questions or want some future videos on this, we can get more specific. I can do a live trade. We can see how Palantir goes next week. In the event that something like that happens, I can kind of go through and give you guys options, more live feed. But just want to let you guys know that that's out there. And a lot of people do it. You can search, there's other YouTube videos on it too, but there's a lot of people that make some bigger trades, talking like, 6 figures into the thousands of dollars, where they're able to basically just roll an option, even if it's 40 days down the road, and able to reduce their overall collateral, still collect a premium, and totally either completely mitigate their loss, or at least reduce the amount of potential loss overall. So that's all I've got for you guys. Hope you guys are making money out there. If you liked it, hit that like button, subscribe if you want to see some future videos, and we'll catch you on the next one, guys.